Hello guys, welcome to the Trading Parrot. You can see that we are continuing with our trajectory towards potentially hitting 60k as we approach the middle of September. In today's video, we're going to focus on the likelihood of that continuation, putting an emphasis on not just the liquidity that we are leaving behind, but also on this threatening CME gap that we have formed over the weekend that could be potentially attracting us as well. We'll look into confluence of liquidity coming from other sources, making the case for hitting 54, 53k a more likely scenario. And for the longer term, I have incredibly good news when it comes not just to what the big whales are doing, but also what the long-term holders have started doing very recently. Do not get confused with the price action and focus on what these whales are doing. I'll share as well a bunch of signals that are about to trigger, and we will also make a stop looking at the signals of open interest, longs, shorts, funding rates. The patterns are becoming significantly more similar to previous Septembers, and it's definitely where I'm putting most of my attention to reduce the noise while improving the accuracy of the calls. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. The channel is growing strongly, all of that thanks to the likes that you're putting on every single video. We're getting over 100 likes. Let's be greedy today. Let's aim for 150 likes. Do you think we can get there? That will be phenomenal. Let's get into the content. Let's get started with the daily time frame. My last video, Monday, clearly mentioned that 57.2 was going to become pretty bumpy. It was our previous support and now a clear resistance, and it's also in confluence with the CPR monthly. We spent below 57.2, 1, 2, 3, 4, 5, 6 candles. Eventually, we had a liquidity grab in here with equal highs right in the middle of the CPR level. We managed to hit the target of 58. We still haven't been able to hit the aggressive one, which was located right below 60k. And since then, we've seen 4 candles of rejection. So far, we are doing pretty good with one of the forecasts I shared over the weekend, where I say that this could become a pivot. We could be heading towards the 60k for a mid-September rejection, and potentially, if that rejection is too strong, we could grab the liquidity that we have between 46 and 48k. If that plays out and we see a higher level on the momentum, that could become the final test of the megaphone pattern on the bottom with a reversal to the upside. Let's have a quick look at the daily RSI. Since we have the breakout on the 9th of September, we've been focusing on this potential target of the top of the channel. Today is sitting at an RSI of 54, which corresponds with a price of 59.8. That is assuming that we hit the top of this channel. If we were to come back down and test the resistance, that will be at an RSI of 33, and it could take down the price up to 51k. If instead of using the 33 from this downward sloping trend line, we were to go to the final line in the sand at the bottom of this channel, RSI is 27. You can see that I plot a target for a potential move like this that didn't end up playing out. If we were to fall from the current prices into an RSI of 27, that will take all the liquidity below us, which is, by the way, the largest liquidity that we have in the chart, coming from liquidation pools. And that is currently sitting at 46.2, which is in line with this potential pivot in here that I place by the end of September. Notice that on the end of September, I'm placing the closing price at around 54k. And I speculate that we could be doing so because from the opening price of September into such closing price will print about minus 9% of drawdown for the full month of September. So even if we were to go to 46, grab the liquidity, came back up to 57, and then close the month at 54, things will be pretty much in line with what typically happens on September when we get a red month. And on the monthly, that will hold the line in this strong support that we still have intact, with the caveat that it will leave a longer gap into here and then get bought up at 54 right above the support of the monthly line. This is just a potential outcome for the month of September based just purely on observation of past performance and probabilities, but nothing is really guaranteed in trading. In fact, Since yesterday's presidential debate, Trump lost 3 points and Harris increased 4 points. I'm not going to comment on how was that achieved or whether that was likely or not, but definitely this is having an effect in the market. There are even indicators that are tracking the market sentiment of each candidate, and there seems to be a correlation with the price of Bitcoin, which shouldn't surprise you since Trump has been so openly declaring his support for crypto, whereas Kamala has been mild in that aspect, not to mention that she's planning to introduce quite heavy taxing when it comes to trading, which many experts are referring to as the end of trading in US. Of course, that seems to be the reason why we are seeing a small pullback today compared to what we saw in the past 2 to 3 days where the price was actually rallying. And I wanted to make a comment on the call we made on September about the 4-hour breakout. You can tell that we made the call of the breakout when the price of Bitcoin was somewhere around 54K. We follow up not just with the RSI but also with the price. At that point, my crypto Twitter didn't have anybody talking about a breakout. We made a video about it. The video got quite a lot of dislikes and I was surprised about that, and I made a comment as well that there's some systematic feedback that is typically negative whenever I made a good call. Obviously, before we see the outcome of the call. You can see that most people that made the calls were talking about the breakout when the price of Bitcoin was already at 57K. Like, for example, this account that had 70,000 views. And all this indicator is doing is telling you that you are already in a green trend and that there could be some continuation. You can also see in this other account with another 60,000 views. Once the price was approaching 57K, we are calling for a breakout. And you can see that at the same time that people were calling for a breakout, we were calling for a potential local top. And 12 hours after that call, we remain below 57.2. Yes, at some point we hit the 58 once more, but it was a second rejection from those levels. And that is the problem with most of the TA that is being done out there, which is only following the trend without looking into liquidity, order blocks, liquidation pools. There's a lot of additional significant things apart from just following a super trend-like indicator that only confirms what already happened too late. I guess I just want to say, be careful. You can tell what's the ratio of people getting wrecked. We saw a channel with 60,000 views, then another one with 54,000, making it almost 120,000 people thinking that there is a breakout at the time where there's actually a rejection. And we get 700 views, making you aware that there is some dangers at this level. I hope you appreciate that, and we can get over 100 likes in this video as well today, because that's really helping the channel to grow. And by the way, guys, the long-term holders continue to accumulate. You can tell in here how pronounced is their accumulation at the moment. Is as big as the one that you saw earlier in the bull market. Shorter holders are in massive panic at the moment, just like they were at these areas that are actually local bottoms. So as I usually say, you decide which ones you want to mimic. Do you want to mimic the ones that are constantly selling at the bottom, or the ones in here that were selling at 73.5, including myself, and buying at these levels? Non-financial advice, but this chart should help you finding your answers. And the only caveat that you should keep in mind is that the people that are long-term holders tend to have a lot of cash on the sides. So if they are wrong at a level like, for example, in here where they started buying this dip, they can still afford to lose a bit and then continue doing so later on. But you can tell that systematically, every time there is strong move to the downside, long-term holders start buying aggressively, taking the risk. The Ethereum signal so far has made a maximum run-up of 5.7%, and at the moment is reversing the results. You can tell that once again is touching the downwards band, so potentially we might get another buy signal in the upcoming days. Make sure that you're subscribed to my Twitter account as well. I will share it there first and let you know. My handle is Trading Parrot. Interestingly, in here we can see that the longs versus shorts on Binance that has been giving multiple buy signals, now it went quiet. And that is because we are sitting at 64 after the last buy signal, and we remain in this area. Looking at the previous September, you can see that the behavior expected of longs versus shorts in the middle of September is for this to come back to levels of 50s and stay there without producing any further buy signal. We don't get one until January, in fact. And during this whole period, that the ratio of longs and shorts remains like this is precisely where you see the price action go parabolic to the upside. This indicator shouldn't be used by itself, but it's nice to see that instead of once again going into these extremes of buys, that we could start seeing something like that playing out as well, confirming that our forecast based on the past performance of September's that you can see in these previous boxes could end up playing out, which if you missed the previous video, as a very quick summary, is to enter September into the red, produce a big drawdown in there, then go higher into the middle of September, and then as an optional to have a second move down towards the end of September. October has two options. It can go slowly up or it can go parabolically up. So that is what we are currently seeing so far, which is now this recovery into the middle of September. And all of that together with loads of similarities, not just in the longs versus shorts, but also when it comes to the negative funding rates, which were pretty much all over the place in August, September, and into October, they started getting less and less as the price started punishing those shorts. Let's have a very quick look at fire charts. Focusing on this area, you can see that the heavy buying of 70 million, and although now the support has become only 49 million, it's still there. And we can also see how we have gone from 64 million of resistance at 70k to 56 million. And that is something that happened on the 8th of September. As the price started creeping up, this time they started pulling out the resistance of 70k and moving it lower, this time with 40 million at around 60k. That is our clear resistance. Nothing has changed when it comes to the larger picture of liquidation pools. The lower end is very heavy, the top end as well, above 73k, and the 67k is the closest, heaviest chunk. Let's go now into scalping mode. We're using Trading Different. This website is offering a discount with a link in the description. When looking at the scalping one, you can see that we still have 58.5 as the largest chunk. There is very mild liquidity below us, but if we remove out of the picture 58k, we see that 53 is heavy in liquidity, followed by 52.5 to 52, and that coincides very well with the CME gap that we still have open between 54.5 to 53.9. Remember, CME gaps have a very high likelihood of getting filled at some point, and given that we have liquidity from this point of view, together with the liquidation pool in there, and now some fair value gaps that have formed below the price, makes it a high likely scenario for the price to come back down and take it. And today I have a surprise because we have clicked the 3 check boxes of the Big Well Explorer. Box number 1, we broke down below the trend line. Box number 2, we are below the MA. And box number 3, we are below a ratio of 1. Only today we have a ratio that shows perfect balance between withdrawals and deposits. And you can tell that those are areas quite bullish from the point of view of spot accumulation from whales. Of course, this can go way lower into a ratio of 0.5, where you double the amount of withdrawals versus deposits, which is precisely what we saw right after the ETF approval. So I think for this time in the market, seeing a ratio of 1 is very good. It still doesn't discard any further distribution like we saw in here, where we started building this bottom, but eventually we have more distribution at the top of the range. But hopefully, if into October we see some mild distribution and eventually continuation towards 0.5, that's definitely going to be extremely bullish. So I think for accumulation and for selling later this year, the two most important aspects is to see what the whales are doing and what the long-term holders are doing. Both of them seem to be heading towards strong accumulation. That doesn't mean that the price cannot get scary and take liquidity from below. Remember that the market has to please both sides, the whales accumulating and their distribution into later stages of the market, but also all the people in heavy leverage that are constantly getting wrecked. They keep placing their liquidity and everything is public, and the whales are not stupid and they know how to hit these levels very easily. That's why we continue to monitor them, and I'll continue to publish one daily video as long as you keep giving the videos 100 likes. And yes, yesterday I didn't publish a video, but nothing really happened to the price during the day. I continue to update you on Twitter that 57.2 was the resistance. I also want to keep you updated with what's going on with the MACD. After we have this bearish cross in here, we are now potentially about to print a bullish crossover. You can see how this level of 53.7 has become strong support. You have 1, 2, 3, 4 touches of 53.8. That together with this bullish crossover, it wouldn't be too much to ask to get to 60K. But remember, we have some pending homeworks in here. Do not get tricked. The most silly thing will be to just take a long because there's a MACD signal, put a stop loss right below you, and then seeing the price coming for the CME gap and getting hit. That's not the point. The idea is to make a plan. I enter at 59, 57, and 53 most recently. I have a decent average. Right now, I'm slightly in the money, and if we continue going higher, that will be great. If we go for the CME gap, I won't do anything because I already have an entry at 53.5 that I publish on my Twitter. But if we go sub 50s to punish those longs that are still open somewhere there, then I'm gonna buy more and I will let you know on Twitter. And we are not just seeing a second consecutive day of inflows on spot ETFs, but this time is a quite decent one with 117. Guys, I'm currently hosting a position airdrop on Bybit. You trade with $100 and they give you additional $500 to trade any of the coins in this list. Have a look at the link in the description, the top one. Make sure you click on it to activate the promotion and to see the instructions. I also left you a link to open a new account on Bybit. If you use my referral link from the description, you can unlock up to 30,000 in rewards. Using a Bybit account is the key to get access to all the perks of the TTP community without paying anything. You're going to find the instructions on Discord on how to connect your Bybit account with the tradingparrot.com, and then you can access all of the hundreds of indicators and backtesting strategies that I have published over the past 4 years. I'll see you there. Take care. Bye-bye.